Global markets are currently providing mixed signals with strength in emerging markets and bonds. In this video, we'll outline what we'll be monitoring this week. We'll look at ETFs that are well positioned from a probabilistic standpoint for either bullish or bearish outcomes. The probabilities in terms of stocks going higher or lower, they remain mixed. We just need to pay attention. The market will give us some information shortly that'll help us sort this out. Spain remains a wild card. If we move to simultaneous printing from the Fed and ECB, obviously that would lean bullish for stocks and commodities. Especially in the short run, it's extremely important that we remain flexible and prepared for both bullish or bearish outcomes in the short to intermediate term. Since things are mixed as of Sunday night heading into the new week, we'll try to provide some insight as things unfold on Twitter. You don't have to be on Twitter or a registered Twitter user to view our comments. You can Google @Ciovacco Capital and you can view our Twitter homepage. To view the video in full screen mode, use this icon in the lower right-hand corner of your video player. We're constantly screening hundreds of ETFs and comparing them head-to-head, looking for the best risk-reward opportunities. We've got a market that could go either way here. What this list of ETFs does for us is several things. One, we'll be taking these symbols and tracking them next week and comparing their performance to these symbols here. So if you put these in a watch list and these are outperforming these, that's obviously a bullish sign. If these are outperforming these, that's a bearish sign. It's a very, very easy way to track this market. What this also tells us is the attractive ETFs are tending to congregate in the emerging market space. Commodity space could turn back up, and these currencies that tend to be bullish and somewhat commodity dependent. Here, if the market decides to move in a bearish fashion, and we've got almost a deadlock. This market could go either way. A lot of these strong charts are at potential points of resistance. And you can also make a similar case for these charts here. These could be leaders next week. These could be leaders next week. If the bulls win out, this is a good screening or shopping list, short list to work from. If the bears win out, this is a good screened list or short shopping list to work from and evaluate from. We could buy from this list next week. We could buy from this list in the coming week. We may do nothing, but this is a great place to start in terms of entering the week and monitoring the battle between risk on and risk off. To improve the clarity of the charts, use this icon in the lower right-hand corner of your video player. This is a 30-minute chart of risk on divided by risk off. The line is rising. We're in risk on. This is what risk off looks like. While we're looking at a 30-minute chart, we're trying to see which way this market may be leaning for early next week. And what we have here, risk off took over here around the 14th. It appears that as of the close on Friday, September 28th, things are very, very even, maybe leaning slightly towards the bulls. This is RSI. You can see here we broke this trend line in a bullish manner. It appears to have held. Here, price for the ratio basically went sideways. This is a bullish divergence here for RSI. Same with rate of change. Breakout seems to be holding. Bullish divergence short term. As far as momentum goes, typically when Williams %R holds this -50 line here, that tends to be a good sign or bullish. You can see last time it happened, we popped higher. Similar situation here. The ratio here broke a trend line. This was step 1 for a potential trend change. This is step 2. This is a higher low relative to this low. And step 3 would be completed. It has not been completed yet for risk on if the ratio moves into this area here above this high. So on Monday, if you're bullish, what you really want to see is the ratio get into this green box. If you're bearish, you want to see a lower low. We don't care which way it goes. The purpose of this chart is just to understand what's happening early in the week. We're looking at the same ratio here. Now we're looking at a weekly chart that we've looked at before. In the past, we've made an argument that when the ratio crosses this dotted line here on the Bollinger Band, it's bullish for stocks. Let's look what a bearish cross looks like. Here the ratio gets a bearish cross, stocks do poorly. Bearish cross, stocks do poorly. Bearish cross, stocks do not do well. Point of showing it, we're not there yet. This still looks okay. We'll be monitoring it, but right now this chart doesn't look too bad. A break here would increase our concerns next week. Same ratio again, weekly chart. This looks very noisy. It's very, very easy to understand. Next week, if you take the S&P 500 relative to TLT, here are some things to look for in terms of a breakdown. Here, if we scroll down a little bit, this is the S&P 500 weekly. This is a peak. There's a line, a peak, a peak. This is basically a peaking process. So if we move up, these boxes are the peaking process for what the ratio looks like. This blue line is the actual top in the S&P 500. So how much deterioration have we seen? The actual top is here, and then relatively soon thereafter, RSI on the weekly chart drops below 50. We're not there yet. We're at 52. So you don't want to see this drop below 50 next week. Rate of change, similar situation after the peak. The rate of change on the ratio fell below 0. This still looks pretty good. We don't want to see it down here, something you can watch on your own next week. Williams percent R after the peak. Look how weak this looks. We don't look that weak now. This is very weak looking. After the peak, went below negative 50. So in a similar vein, you don't want to see Williams percent R in the ratio break negative 50 next week. A few more comments. This is the ratio itself. Here's resistance. This is a bullish breakout here. What once was resistance here and here may now act as support. So it's possible next week we'll get a bounce there. We've also seen here trend line break, step 1 of a trend change. Step 2 is this is a higher low relative to this low. We have not completed step 3 yet. If the ratio can move into this area here and make a higher high, that would be bullish. If things break in a bullish manner, we like emerging markets in Asia. This is AAXJ or Asia X Japan relative to the S&P 500. It's a weekly chart. Scroll down here. Notice RSI on this relative chart made a bullish break. If you're a bull, you'd like to see RSI move this way next week. We do not own this yet. It's something we're looking at. Here, if you look at the ratio, so when this ratio is rising, AAXJ is stronger than this S&P 500 index. This is when it's weaker, and you can see it's been weak relative to the stock market for quite some time. This is all the way back to October of 2010. What you'd like to do is buy things that are out of favor as they're turning back up. This could potentially be a good risk-reward entry point. Some things to notice. As the ratio was falling, so weakness for AAXJ, bullish divergence here on a weekly MACD. This is bullish and tells you to be open to a turn here. This is a similar look to what we saw in many charts at the end of May last year before the markets rallied. So what we'd like to see on this chart next week is we'd like to see the ratio clearly break out of this base here and move into this white space. Now we're looking at the same ratio. This time we're using SPY instead of the S&P 500. This is a daily chart. You can see a left shoulder, a head, and a right shoulder. It appears that we broke out on a daily chart. We may come back and retest this, but if this ratio can stay above this blue line at any point, That's bullish for AAXJ relative to the S&P 500. If the bears win the battle in the short term, we would be open to looking at bonds and ETFs such as TLT. If the bulls win the intermediate term battle, we'd be interested in something like AAXJ. Therefore, if we monitor the ratio of these two ETFs, we can probably get a good handle on risk on versus risk off next week. You can see here, there's really two forms of potential resistance for risk on here. Obviously, if this ratio can break into this area here, that would be good for the bulls. Here on the ratio chart, these are bullish looks to MACD on a weekly and RSI. You can see price was really consolidating here, and yet MACD is getting healthier. Consolidation, RSI looking a little bit better. If you're a bull, what we'll be watching, we do not want to see Williams %R enter this box next week, nor do we want to see the rate of change move below 0. If the bulls win the intermediate term battle, we like both AAXJ and EEM. The purpose of showing this is AAXJ broke out on a weekly chart last week relative to the emerging markets, but really wasn't confirmed well. You can see this is a bearish divergence with RSI and a bearish divergence with MACD histogram on this weekly ratio chart. What this means is it doesn't necessarily mean that it's bearish for AAXJ. We still like it. It just means you should be open to EEM possibly playing some catch-up and maybe even overtaking AAXJ in the weeks and months ahead. This is another risk-on divided by risk-off ratio chart that we've shown in the past. This is the S&P 500 divided by AGG, the aggregate bond fund. Head and shoulders pattern here. You can see 3 weeks ago we clearly broke out. Now we violated the neckline again. That looks bearish, but it's not all that unusual to come back and scare and somewhat have a retest. The point of showing this is you can monitor this ratio next week and in the coming weeks, and obviously if it moves in this direction, that's bearish, especially if it breaks support here, and if it retakes this neckline, that's bullish. Here's an ETF we own and took some profits on recently, but we did keep part of the position. EPI is the India Earnings Fund ETF. Just some quick points here. You've got relative to the S&P 500, a 5-month basing period here, and a clear breakout. This is part of the emerging markets, so it's part of our theme that says if the markets can push higher, where your good risk-reward ratios may be is in the emerging markets. You can see here on RSI, on this daily chart, there's a bullish breakout. Obviously, this has gone straight up in the short term, so some weakness wouldn't be that surprising, but there is this nice base here to potentially protect on the downside. Same ratio, same chart, EPI divided by the S&P 500. This is just weekly. You can also see in a weekly chart there's a bullish breakout on RSI. This is the highest RSI has been in quite some time. From a bearish perspective, this is a manually drawn trend line. I'm guessing you could draw it in a fashion where this is actually resistance and not a breakout. So it's possible that we'll get a reversal here and that this trend line is resistance. Here, these moving average, this tight cluster, would most likely provide some support in this area if EPI gets weak relative to the S&P 500. But everything on this chart looks good. You just may be getting a pullback here at potential resistance. Another ETF from the emerging markets, EWT, relative to the S&P 500 weekly. You've got this nice breakout here on a weekly chart. The tight cluster turning up tends to be a good sign. RSI bullish breakout. You have some support down in this area if we see some weakness and some potential support here. The INP India ETF is another emerging market ETF looking strong relative to the S&P 500 on a daily chart. Nice breakout here. This may act as support on a pullback You also have an RSI bullish breakout confirming this move here. This has moved quite a ways straight up. Straight up charts are a little scary, but longer term, this looks good. Same ratio we just looked at. This is a weekly version, IMP divided by the S&P 500. Step 1, trend break here. Step 2 is we're making higher lows relative to this low. Step 3, we made a higher high relative to this high. Tight cluster of the moving averages and a breakout. Longer term, IMP looks healthy. Even if it were to pull back, you've got support here somewhere. This chart here illustrates why it's important to head into the new week with both a bearish and a bullish game plan. This is corporate bonds, LQD, ETF divided by the S&P 500. When it's rising, the bonds are in favor. When it's falling, stocks are in favor relative to corporate bonds. From a bearish perspective, this is the S&P 500 here. That's a peak. That's a peak. Stocks did poorly. Stocks did poorly. That's a weekly chart, so that's a pretty significant move. Stocks did poorly. Notice these peaks coincide with this ratio hitting support. Support, stocks do poorly. Support, stocks do poorly. Support, stocks roll over and do poorly. We just hit a similar bearish support line. From a bullish perspective, however, this line here could be seen as resistance. This could go either way. We're just going to monitor it. That's why we built the chart. We're prepared for either outcome. We sold our silver a couple of weeks ago for a very, very nice gain. If you still own silver, we like silver. It just may face some hurdles in the short term. This is a daily chart of SLV. Points are here is the angle, and we came off the bottom in July. Trend line, parallel trend line, seemed to bound price, meaning this could be resistance again. Support, support, roughly support. These are parallel trend lines here at this peak. When we made it from here to here, we made it from here to potentially here. If we make this move again, this could be resistance. Point of the exercise is SLV may face resistance here. If it spikes higher to 36, as it did here, look for a pullback potentially. This doesn't look very convincing here. This is a very, very weak momentum move. You'd like to see that move higher and be aware that we could come down. If we're able to break into this white space here, obviously that's bullish and a good sign for silver. Utilities can be thought of as a defensive asset. This is a daily XLU divided by the S&P 500. You can see here Williams percent R held at negative 50. That would tend to lean bullish for utilities relative to the general stock market. You also have a bullish RSI trend line breakout here. Obviously, you'd like to see RSI move into this area here. This still looks relatively bearish. You'd like it to look more like this here rather than this here. You've also got on this relative chart, that's a bullish breakout. That's a higher low relative to this low. If the ratio can clear this dotted line here next week and break into this area here, that would look like a trend change for utilities relative to the S&P 500. We'll close with this weekly chart of the Russell 2000 Small Cap Index. This chart could go either way. You've got RSI support here. We could break down to this line here. On the chart itself, support, support, potential support. If it doesn't hold, you've also got potential support here and here. It's extremely important to keep an open mind. We don't really care which way it goes. We just want to be ready for the next few weeks and the next few months. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Ciovacco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.